Investors and traders, welcome to the channel Market Shark Pattern. Today we'll be taking a look at the major US stock indices. This video is for educational purposes only and it is not a financial advice. Okay, so what we are looking at is the daily chart of the E-mini S&P 500 E-mini futures. And if you recall the last video which I did, I do apologize. I was not able to make a lot of videos last week due to travel. But the previous video which we had done on the indices, we were looking at this 40-50 level as a key level because of the 38.2% Fibonacci retracement of this line, this move here. And what we had discussed was if the price is going to move lower than this 40-50 level, then we can anticipate lower prices and perhaps even begin to look the market in a different angle. So what happened over the last few days is because of the inflation data coming, the market had inflation data coming in stronger than expected, especially last Friday, the core PCE market reacted to that, and the price did move lower. Now, in fact, what has happened is that the the price has actually moved to a price level which is pretty important, and it has retraced to the 38.2% Fibonacci retracement of the entire move up from the 13th of October 2022 lows of last year. Now, it hasn't hit it exactly in S&P 500, but it is pretty close, and it's possible that because of the strong momentum we have seen to the downside, price could actually fluctuate a little bit here and goes perhaps sideways. And the key, what we are looking at is whether this level is going to get held or not. Now, the big question which we have is this bigger ABCD pattern represented in blue, whether it is still in play or not, which could actually see us go to 44.50. But before it could do that, we have also identified further resistance levels around 42.50 and 4300. So in my view, that depends upon this 38.2% Fibonacci retracement around 3940 level, whether it is held onto consecutive daily basis or if the price moves below this onto consecutive daily basis. However, as we'll see that the other indices, they are also closed at really important and critical levels, which is giving us a possibility that if we see good price action from the start of the week, then perhaps there's a good chance the support will be held, and then price could actually look to move higher. So as the next chart, let's take a look at the Russell 2000. We are looking at Russell 2000 index because it is a widely traded index after S&P 500 on a daily trading basis. So it's pretty important to also look at this. It had done a really nice ABCD formation here and formed a double top here. And what we were discussing was when the price pulled down to watch for this 38.2% Fibonacci retracement around 1906, which also had a structural support here. So price did move lower, and what has happened is it has found support at a confluence of Fibonacci retracement levels. So one of them is the 38.2% Fibonacci retracement coming from the 13th of October lows of 2022, so last year, where this whole big up move started from. And then we also have a 78.6% Fibonacci retracement of this recent leg higher from January 19th January 2023. And then also we have another 50% retracement of this entire CD leg. So there is a confluence of retracement levels coming together, which means that we should pay attention to this level, which could act as a pretty good support perhaps, but again, depending upon the price action. Now further looking at what we also see is that right about here around this price level we also have an ABCD formation coming together a little bit lower around 1865 level, but close enough as well. So what it means is that we have a confluence of pattern and Fibonacci ratios coming together. So we should pay really close attention to this level and see how the price is actually going to trade around here. And it might be the case that it could act as a pretty good turns out to be a pretty good support level, and price in fact begins to move higher. If this scenario doesn't play out, then we are looking at for two consecutive daily closes below this level, and that could mean that okay, we could go down a whole lot lower, and we'll have to take off the further high prices targets off the table. But for now, we have to watch this level. Okay, so now we are going to take a look at um, the NQs. So this is the NQ formation, and what we were looking for in the NQ was the ABCD pattern, which which completed around the 12,600 level. However, the momentum was so strong, it went higher, and we had some higher targets levels as well. However, the price actually began to go sideways to lower, and what we have seen now is that this index is also at certain key levels. So it is right at the 61.8% retracement of this leg right here, and then we also have right from the entire lows of the 13th of October 2022, we have this 38.2% Fibonacci retracement. And guess what? This is exactly where the market closed last Friday. So the market did move lower than this level, but then we had the 78.6, 61.8% Fibonacci retracement of this line segment here. So it's kind of, trading in that range. So this gives us this makes us this level to watch. This makes us watch this level really carefully. And the other two indices which we had looked at, this one is also at a very key level. So in the early days of next week's trading, we'll be able to see whether this level is held or not. If this level is held on two consecutive daily basis, then this could be a pretty good support level. Going below this would mean that okay, the price is going to actually move a whole lot lower, and we will have to watch for two consecutive daily closes below this level. Okay, so let's take a look at the um, Dow Jones. In Dow Jones index, if you have been following our channel, you'll know that we like to follow the Dow Jones on cash index basis. So what we are looking at is we were in fact looking for an ABCD formation to take us up here for a double top formation. That scenario did not play out, and we had this wedge formation taking place, and price had actually rotated lower. Now there are two things I would like to identify. One thing is that although the price did move lower over the last week quite substantially, however, it did not take these lows out. So the lows of 22nd of December are still in place. And last Friday's close was actually higher, although negative. And also, I would like to bring to the attention is that the price has not even been able to retrace to the 38.2% Fibonacci retracement level, which means that this index actually looks pretty strong compared to the other major US indices we just looked at in the video earlier. So that is something which we should pay close attention to. So this in Dow Jones index looks stronger. Let's take a look at the futures as well. So we are looking at YM, quite similar situation. However, in the futures, here it is retesting the 38.2% Fibonacci retracement and the support coming from the structure around here. So let me actually draw this support structure like this. In the futures, it did take out the last Friday, it did take out the lows of 20th of December 2022. So this is also something we need to keep in mind. So just like the cash index, we were looking for an ABCD move higher to take us into this double top formation. That did not play out, so I've taken that out. Now what it appears to be doing is the market seems to be in a range, so it's just consolidating here. Just going back to the index formation, we can also clearly see this market is range bound, although it looks this index looks stronger than the other indices. So this is what we are watching in the major US stock indices. If you do like our video and channel and the stock analysis which we do, then please do subscribe to the channel. Thank you very much.